Hi there, it's Paul from Heiken Forex, and this is the latest release of the Heiken Forex indicator. Well, this isn't. This is a blank chart, so I'm going to show you how easy it is to convert your MetaTrader 4 system to use the Heiken Forex system, and to really make trading. I think it makes it a lot easier because you're letting the computer do the work. So there's lots of rules that people use for trading that are incorporated into this indicator, and so what I'm going to do first to show you how to set it up. So first of all, you've got a blank chart like this. So what you want to do is grab your hurricane indicator from your and drop it onto the chart like this. Okay, and there's lots of options. The only one you really want to care about for now is default lot size. Okay, hit OK. Now it looks a bit crazy. That's okay, doesn't matter, because that's actually helping you to trade. You might not believe that, but give me time. Give me time. Don't walk away and go, I like my clean charts and drawing little boxes on them. Okay, because you know that doesn't work particularly well all the time. Because markets do what they do, you know, we're essentially predicting the future. So anyway, to carry on, so the first thing I do is drop it onto my chart. Then I set the chart up how I want. I've got it on an hourly. I like to trade the hourly. Trading. Okay, don't do trading, do template, save template, and save it as default.tpl. Okay, and that means that when you open a new chart, it'll open looking like that, and I've already done that, so I don't need to. So the next thing you do is come to my, if you come onto the Heiken Forex website, you can link through join our trading group, and you can get this indicator free. It's called Open All Charts, and you click on it like this, and you hit OK, and it'll open all the currency charts automatically. So just wait here for a second. If your machine's a bit slow or a bit dead, it probably isn't going to work very well. So. But it'll get there, and eventually it'll do this, and it'll sit there like that, and then when it's settled down it'll do that. And just get the alert box up again, and you'll get this, you'll get a box that comes up and says complete, thanks for using, will remove myself because it takes itself off the chart, but also go back to the first chart, okay, and kill it. Okay, just click on that little X up there. Right, so now we're set up. Let's talk about what we've got on the screen, because it looks crazy. All right, it looks crazy, but that's because it'll help you to trade. Okay, a crazy chart is not one you should be trading. So let's pick this one here, and you can see there's a lot going on it. All right, but the main thing you're doing is waiting for signals. You don't actually have to analyze any of these charts. Okay, but when you do get a signal, there's some things going on here that you can actually analyze. This new MACD we've got. Just want to check something's running. It's not. Okay, I'm just going to start my drawing on the screen thing. You can see I'm running on Linux. Apply. Okay, so there's this new MACD. You see there's the 200 period Heiken Ashi there. So you can see it's gold and blue, and it shows you when it's in a buy and a sell. And then you've got a 50 period Heiken Ashi going here, and that shows you when it's in a buy and a sell. You see how here it's kind of dropped out of being in this buy trend, and plotted against the 200 period Heiken Ashi is MACD. And it's plotted in a different way, because you can see there's only one, there's a histogram rather than one line, and you can see that it kind of goes, it's green when there's a buy thing coming in, and red when it's sell. So when the MACD main is the signals above the main, etc., etc. So here you've got a buy going on, and it's incorporated in these signals that you see here. So for instance here we've got sells going on. We've got a nice strong sell here. So you can see the strength of it is by the green and the red. So I'm going to just flip over like this. So let's look at this one here. For instance, you can see we start seeing a sell here. Okay, so it's not really showing it. Don't think that means it's a sell. That means it's a strong sell, because it's below the 200 period moving average. Okay, whereas let's try and find one here. You can see there's a strong buy because it's above the 200 period moving average. Look at these buys. You see there's a buy here. Look at how the MACD goes red to say don't keep going, but it's the other way around when you're selling. So let me just flip it over here. So here you can see that there's a signal on that green candle. There's its target and it hits it, whereas there's a blue, and then you can see here, but you wouldn't take that initially. You could take it if you're crazy, but you can see the MACD is actually moving up, so it's actually turning into a green, into the first stages of a buy. You can see this big buy move, and then there's some more buy signals up here. So when you get a signal, all you have to do is look at it, look at what the MACD is doing. So for instance, you're not going to get a buy signal in this. The trend, its momentum's got weak. Okay, you can see that the momentum has dropped off and got weak. And so if you're looking at a chart and it's not like this, if you're looking at a chart that's crazy, so all these are quite simple. They're buy. They're all. You shouldn't be selling that at the moment. It's all buys. But you can see how the MACD is closer to. Look how it's lost its momentum. It doesn't show that there's the strength that it had before. Whereas here, you can see how it dropped back, and then we've got this lovely buy signal straight into two fib levels basically. But if you've got one that looks like this and looks crazy, guess what? You shouldn't be doing, trading it. Okay, actually this one's not too bad because it actually has some buys and it all does add kind of up. And you can see how the 50 period Heiken Ashi, which I believe is a stronger signal, you see the price is just honouring it and bouncing off of it, so you can keep taking these buys off of there all the way up there until it breaks down through the 50 period Heiken Ashi and through the 200. And now it's looking and saying, well, maybe we've got to sell. Actually, what happened was you had a whipsaw because it was some news, and the next candle, the next hour after the news, you got back into a buy, like a nice strong buy candle. And now the momentum's dropped off, so you don't want to be taking any sells. And in fact, it won't give you any sell signals. So there was a little bit of a buy signal yesterday, early this morning, sorry. But that's out now. So the way to read it is very simple. If you see, so when we're bearish, okay, green is actually, we're selling. Okay, there's a sell entry possibilities where there's green, and when we're buying, so that the MACD is above the 0 line, which is effectively the 200 period MA, you'll see how we get these strong greens like this. So green is basically you can be in a trade. So if you start to look how you see it loses momentum because MACD is a momentum indicator. So by incorporating it into the Heiken Forex indicator, you can see, for instance, here, look how this big rally on dollar yen, beautiful rally, very, very simple. Just take the buys all the way up. It's really lost this is why I'm not taking any trades on dollar yen at the moment. Look at where the take profits are. The take profits are getting closer, and look how the MACD is just more and more. There's less and less momentum in there because everyone's waiting for something to happen on with the Japanese intervention. They're waiting for some sort of intervention from the Bank of Japan. But if you see a chart like this, you can pretty much trade it. I'm just not tempted to trade it. I just can't. There was a whipsaw as well yesterday. It was just really weird. It's just like in the 30 seconds. But you look at this chart, and just from the chart you can tell it's probably a bad idea to trade it. But there's other things going on as well. If you look at the trend strength here, look how it's even. There's red and green are both even, which means that it's not really got a lot of strength as a trend, and probably isn't a great pair to trade. It's gold at the moment. It is floundering around. You see, it keeps bouncing off this moving average. In fact, that's probably a bit of a long-term pennant because it's quite, there's quite a long way through. So let's talk about some other things you've got on these charts while we're here. So one of the other things you've got, and if you don't see them, this is just because I've regenerated the charts just now, so H1, right. So the other thing you should see on the chart are these two lines, and you see there's a red line and a green line. Now if you're a prop trader, you have a hard time of it because you have to stick within the limits of your prop, and one of those is to know what your risk reward is. And actually every trader should be doing that. If you're going to take a trade, you need to know what your risk reward is, okay? And in fact, I wouldn't be taking a trade now because the market's thin. You can see how there's a lot of red there, okay? And likewise, if I was looking at this side, if there was a lot of green where there was a lot of red here, then I'd be thinking I don't really want to take a trade on that because that's a strength indicator. So let's say I was going to take a trade. So what I can do is move. Let's just click on it like this. You'll see it kind of gets a little dot just at there. Drag that down. There's my stop. There's the price, and there's the take profit. I'd never take this trade, by the way, just because the market's so thin at the moment. Click on that, drag it down, okay, and here down the bottom you can see here's the calculator, and I've just set it by moving these lines around. So it says reward is £300, risk is 1, so it's a 2-to-1 risk reward. If I had a trade on, which I don't at the moment, I've got no trades on at the moment, all my trades are calculated up here. So in your prop challenge, it's going to say that you've only got like 4% a day that you're allowed to have, and if that means that you can watch up here how much risk you've got on, because it will show it there. So if it says you've got 3.5% risk because of your stops, you only need to tighten your stops, okay, or don't take any more trades, and don't take any more trades, because you've got a 4% per day loss, you know, and drawdown as well. Looking at what your maximum drawdown is very, very important. If you're doing prop trading, you must know what your, because that's the way they make the money to fund them. A lot of the money is actually provided by people who lose their prop trading challenges. So they take their challenges and they lose them. So yeah, so I mean, just here's another chart. Let's just go Aussie New Zealand quickly. I don't think there's anything more to show you there. There's the current candle strength. That means the actual candle you're on. So if it's like that, it's flat. It's basically, and as you can see, it is flat. And look at the trend strength is actually, it's got quite a good longer term trend going, but it's just flat. It's just not moving. And you can see that there's a little bit more bearish now, but there's no signals on that at all. And you can see here where there was some momentum in the market, it was green for a lot, so it shows you the momentum's there, and now it's red. It's saying there's no momentum in the market. And you might think you know it'd be better to put it as a buy and a sell, but I think it's better to say that is momentum. You know, you see how here there was momentum in the market, and if you see it dropping out of momentum, you might go, do you know what, I'm going to come out of that. It does actually hit the target there, but again, you know, there's not a lot of momentum in this market, and that's normal because it's Aussie New Zealand. You'll see the same on GBP, Euro GBP is exactly the same. There's not a lot of movement in those markets generally. This is quite a nice trade. So what about stops take profits? Basically there's a little red dot, which sometimes can be a bit difficult to see, but I normally just pop it sort of at a sensible, my stop at a sensible place. I can use my risk reward calculator. Again, it's not appeared on these charts because I've only just generated them. So I just flipped to a different time zone. Time frame. Use your risk reward calculator. It's not showing at the moment because the price is way down there, so I'll just drag it down there. When it generates a signal, it'll put them on anyway, so they'll be here for you to move like that. And you can see I can do it. I could probably get a 1-to-1 if I was trading to the next fib level, which I would never do on Aussie New Zealand. So I normally, these little gold things are ATR targets. I normally like to trade to the next fib level, and especially when they tie up like this one, you can see how it does tie up, and in fact it does make it to that fib level. So yeah, and you can change all the colors and everything. See, this is what you should be trading, this stuff, because it's a clean chart. However, you can see how everything is getting a lot more weakness. We need this strength, and normally by about the third move in a trend, it normally does start losing strength. This is actually a reversing market. I can tell you that for now. Look at it's a reversing market, and you can tell that because what will happen is the Heiken Ashi, this Heiken Ashi will go gold. Sorry, this will go gold. You see the price break through this Heiken Ashi. You see the MACD will go green to start saying we've got some momentum to the downside. So markets are changing direction, and that's why right now there ain't a lot of trades, people, because I believe markets are changing direction on the whole. All right, maybe except for this one. Okay, so that's it. So so I must talk about the trading room. I don't just leave you. That's my MetaTrader 4. Where is it? Here it is. Okay, I don't just leave you with a with an indicator and no help. So what you've got here is the Hurricane Forex trading room. It's completely free. You can sign up at hurricaneforex.com. You don't even have to be using the indicator. Just come and join the other traders, and we're just discussing stuff and news and what's going on in the markets right now. It's got lots of tools here. It's got some forums. So you open this up, there's some forums down there. Excuse me, been talking for a while. You can see we've got some important news for sterling this morning. You know, it's lots and lots of things going on here. It's completely free just to come and join it. We're not like other people charging you a monthly fee for that. The price for the Hurricane Forex indicator is $30 a month. Or you can just buy it outright for $7.99. It used to be $800, but I lost a trading challenge with somebody. So that's it really, I suppose. I hope that you enjoy it. Just pop over to hurricaneforex.com. I don't want to create a post at the moment. Pop over to hurricaneforex.com, get your copy, come and join the trading room, and let's make some money. Let's trade. Thanks very much. Don't forget to like and subscribe to the videos, because I'll be making more.